Hi everyone, welcome to today's live analysis session brought to you by IC Markets. Trust you've all had a great weekend. Yeah, and now let's get back to a brand new week of trading. All right, before we start, right, let's please take note of the disclaimer. Right, this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Right, my name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. All right, before we dive into the charts and trading view, of course, let's take a quick look at the economic calendar and see what's lined up this week. It's actually a pretty heavy calendar once more, and we've got the Bank of Japan releasing its monetary policy statement on Thursday, the 31st of October, and it's also jobs data out of the US as well. So it's going to be a very heavy trading week as well. All right, hi Bob, good to see you as well. Thanks for tuning in. All right, as you can see here, right, today is relatively quiet, nothing much going on today, apart from Bank of Canada Governor Tiff Malcolm speaking. But tomorrow we've got JOLTS job openings coming up at 2 p.m. along with the Conference Board's Consumer Confidence Survey. We also have monetary policy report hearings from the UK. And then on Wednesday, we have Australia's inflation data, CPI data out of Australia. And of course, we have GDP data and the ADP employment report on Wednesday. And on Thursday, right, we have the Bank of Japan releasing its monetary policy statement, followed by Governor Kazuo Ueda's press conference. We also have manufacturing and services PMI data out of China, retail sales out of Australia, GDP data out of Canada, and flash CPI data out of Europe as well. And then on Friday, we have inflation data out of Switzerland, and of course, the highly anticipated non-farm payrolls, along with the unemployment rate. That's at 12:30 p.m. GMT, and at 2 p.m. later on that day, we also have ISM manufacturing PMI report as well. Right, hi Ren, good morning. Right, yep, we'll definitely be covering the Aussie and the cable as well. Right, we'll of course start with the dollar index and make our way down through most of the major currency pairs, touch on the commodities, and also take a look at the indices. Right, so looking at Japan's interest rates, right, they have raised rates twice this year, but at the previous meeting in September, they kept its key policy rate on hold at 0.25%. Right. So looking at where the level of inflation currently sits, we can see inflation has been relatively stable. When we look at headline CPI, which is the chart on the left, and core CPI, which is the chart on the right, we can see that for the month of September, headline CPI has eased from 3% down to 2.5%, while the core reading has moderated lower from 2.8% down to 2.4%. Right, so inflation seems to be relatively contained, right? And when we look at PMI activity in Japan, we can see that it has actually fallen into contraction. The composite PMI reading, which was the flash reading, fell into contraction for the month of October. This was the first contraction since June. And if we see and if we add everything up together, right, with inflation looking relatively contained and PMI activity falling into contraction, it doesn't really leave the Bank of Japan with much room to move ahead with another rate hike, right? So it does seem like we can expect the Bank of Japan to keep rates on hold, which is also what the market consensus is. The market consensus is for the BOJ to keep rates on hold once more. And as I mentioned, right, we see inflation being relatively contained, while PMI activity falling into contraction, right, doesn't actually provide the right evidence that the Bank of Japan should move ahead with a rate hike. So we can probably expect rates to be kept on hold. But what's going to be key will be the press conference by Governor Kazuo Ueda, right? That's going to be very market moving, and it's definitely going to inject a lot of volatility into markets. So just be prepared, right? Yen traders, be prepared on Thursday, 31st of October, right? Whether you're trading the dollar yen, the pound yen, or euro yen, all the yen crosses are going to be significantly impacted, and we can expect a lot of volatility for this for the yen, and of course for the crosses as well. Right, now let's take a look at US jobs data. We have the ADP employment report being released on Wednesday, 30th of October at 12:15 p.m. GMT. After a nice rebound for the month of September, with 143 jobs being added, well above the forecast of 120,000. Right, we are now seeing another month of soft job creation again. Right, so we can see the current 12-month average. The 12-month average currently stands at 144,000, and we can see that the forecast for August of 101,000 is well below the 12-month average. So once again, we are looking at much softer readings, similar to levels that we last saw in July and August. So as of now, based on this forecast, it does seem like this job creation rebound in the month of September looks to be a one-off phenomena as of now, right? Because this is a relatively soft reading or soft forecast for the month of August. Right, looking at the BLS employment report as well, right? This is the Bureau of Labor Statistics, where they will release the non-farm payrolls as well as the unemployment rate, right? Similar to the ADP report and forecast, we are also seeing non-farm payrolls expected to rise just 111,000, a far cry from September's strong rebound of 254,000. Right, this 111,000 level is well below the 12-month average of 203,000, and also it's well below the data that we've seen from June to August. So this looks like to be another poor month of job creation by the non-farm payrolls as well. On the slightly brighter side, the unemployment rate is expected to remain unchanged at 4.1%, right? So we've seen the unemployment rate climb pull back slightly over the last couple of months. And for the month of August, is expected to, month of October, month of October is expected to remain unchanged at 4.1%. But generally, we can see the forecast for both the ADP and non-farm payrolls point to a return of softer job creation. And if we do see a poor labor market reports this week, that could very likely function as a bearish catalyst for the dollar, right? We could expect the dollar to see significant headwinds towards the second half of this week. All right, now let's start the analysis on the dollar index, of course, and then make our way down to through the currency pairs. Of course, there's a request by Ren. We'll look at the Aussie and the cable as well, and of course, we got to take a look at dollar yen, right? With the Bank of Japan releasing its monetary policy statement on Thursday. That's definitely going to be important currency pair to keep an eye on as well. All right, so as you can see here, demand for the dollar has been extremely strong, right? We have seen 4 consecutive weeks of strong gains for the dollar, right? The dollar index has gained almost 3.9% over this 4-week period, gaining about 390 pips, right? This is a very strong rebound in the dollar index here. However, today it does look like it is finally perhaps running out of steam. Well, it's just one day, right? So it looks like it did break higher, right? The dollar index hit a high of 104.57 today before pulling back quite sharply, and it looks to have run into resistance and where the pivot has been identified. Right, the pivot is an overlap resistance, right? We can see that this level at 104.68 previously functioned as a pretty decent support in mid-June, and after which it proceeded to function as resistance at the end of July. So this creates a nice overlap level, which is also accompanied by Fibonacci retracement at 78.6%. This retracement was found by starting from this swing high on the 28th of June, going down to this swing low on the 27th of September, right? So we can see the 78.6% retracement aligned pretty well with the overlap resistance, which is the pivot. So it does look like the dollar index has stalled around this level earlier this morning and looks to be pulling back. Right, so in terms of support, right, it's a pretty decent pullback support level at 103.67. Right, we can see that this level here previously functioned as support as well in mid-July, and then we can see that it also is accompanied by Fibonacci retracement at 23.6%. So if we do see this pullback in the dollar index drop gain further, right, deepen further, this is where we can probably expect it to stabilize as well. And higher up, right, there's a pretty decent overlap resistance level at 105.51. Right, we can see the dollar index running into a little bit of resistance here in mid-June, after which when it broke out of this level towards the end of June, it found support, creating a nice overlap level, and then a nice bounce here as well. So we can see here this level has functioned as a pretty decent overlap, and this is where we can identify the first resistance for the dollar index. Right, so take note, if you do see softer jobs data this week, right? We have Joel's job openings on Tuesday, ADP employment report on Wednesday, and non-farm payrolls on Friday, along with the unemployment rate. So if we do see uh, a trifecta of softer labor market data, that's quite likely going to push the dollar index even lower, and this first support could be significantly tested as well. So let's try and identify the next support level, right? Should this first support give way, right? So we can try and see there is perhaps a pretty decent pullback level here, right? At around 102.56. We can see the dollar index finding support here on 5th of August briefly, and then on the 14th of August as well. Then a little bit of resistance here on Monday and Tuesday, 7 and 8 of October, creating a pretty decent overlap level at 102.56. So this is where we can identify the second support. And let's look at the Fibonacci retracements as well. Do we have, okay, we have a 50% aligning quite sitting just underneath it. So we can use 23.6 and 50%. Right, so take note, if we do see all the relevant jobs data point to softer readings, right, we can expect the dollar index to come under pretty strong selling pressures, right? It's expected to face strong headwinds, and we can expect it to pull back towards the first support at the very least. And perhaps if the data is truly bad, we can then anticipate that it's going to break through the first support and at least make a push towards all the way down towards the second support, which is at around 102.56. Right, hi Costas, thanks for tuning in. Yep, you too. Hope we are wishing everyone a great week and trust you've had a great weekend as well. Right, so take note, these are the key levels for the dollar index on the daily time frame. Right, it has just reacted off close to the pivot today, earlier this morning, and it's dropped lower. The dollar index hit a high of 104.57 earlier this morning and has reversed quite sharply. The pivot is an overlap resistance level at 104.68, which is accompanied by a Fibonacci retracement at 78.6%. Right, the most immediate support below is at 103.67, is a pretty decent pullback support level. It's accompanied by the 23.6% Fibonacci retracement. And the next major support level is another pullback level at 102.56, which is accompanied by a 50% retracement as well. So take note, these are the key levels here. And because we have 3 sets of jobs data coming up this week, lined up this week, and if all of them disappoint market expectations, we can probably expect the dollar to face significant headwinds and make at least a pullback towards the first support. And if data is really bad, we can probably see it make a bearish breakout through the first support and probably drop down close towards the second support as well, right? So take note, these are the key levels for the dollar index on the daily time frame. All right, we had a request by Ren as well for the Aussie and cable, so we'll look at cable and Aussie, and of course we'll take a look at dollar yen since we've got the BOJ coming up this week. Now, so for cable, right, we can see that last Wednesday and Thursday, it has stabilized briefly at around 1.2914 and retrace a little bit higher, and it's just about floating or hovering around 1.2664 here. So the pivot, right, as cable was falling lower today, right, this morning as markets reopened, it was falling lower. This little pullback support level at 1.2914 had been identified as the pivot, right? We're expecting a bounce of this pivot, very similar to the dollar index here, right? Expecting it to run into resistance at the pivot and reverse, but it came very close, right? And of course, naturally, we can also see that once again, the cable stabilizing just above the pivot and looks to be rising higher. Now, the first resistance for cable is at this overlap level here at 1.3044. We can see that this level previously functioned as a nice swing high resistance on 17th of July, a nice swing low support on the 11th of September, and then a little bit of support here as well in early October, and some resistance in the third week of October as well. So this creates a nice overlap level at 1.3044, which we have identified as the first resistance. This overlap level is also accompanied by a Fibonacci retracement at 23.6%. This retracement was found by starting from here, this swing high on the 26th of September, ending with the swing low on the 23rd of October, right? And beyond this, the pivot level, right, we can also see there's a Fibonacci extension at 127%, adding a little bit of, adding some significance to the strength of this level here. This extension level was found by running a retracement from this low on 11th of September, going up to this high on the 26th of September. So the extension levels sits slightly below the pivot here, identifying a pretty strong support zone, right? So for cable, if we if we're expecting the dollar to get weaker this week, right, then and if you've gone long on the dollar, gone long on cable, right, you can identify a potential take profit target close to the first resistance, right? The first resistance is at 1.3044. Identifying your first take profit target at around this first resistance is a suitable area to do so, right? And higher up, the next resistance level is it's a bit choppy here. It's not really that great, but perhaps let's look at all the fibs. Let's see if we can use a Fibonacci retracement as the next potential level, probably where the 38.2% comes in, right? Let's keep 23 and 38. Probably where the 38.2% Fibonacci retracement comes in is this is where we can identify another pretty decent resistance barrier. And also at the same time, right, take note, if we do see cable make a break above this descending trend line, right? That's a pretty decent descending trend line for this currency pair that's been in place since the beginning of October. Right, if it does break above this descending trend line, then we can probably expect this currency pair to drive higher and at least target the first resistance as the first potential take profit target. And we can then use the 38.2% Fibonacci retracement to identify the next potential target for any long trades that we may have. Now, on the support side, I see a pretty decent overlap level at 1.2807. Previously, this level functioned as a nice swing high resistance in the beginning of June. A little bit of resistance here on 8th of July, after which it stabilized above this level here at the end of July as well, right? Not the best overlap, right? I agree, this is not the best overlap level here, but there seem to be enough reactions of this level since 4th of June to give me some confidence that this could be the next support level beyond the pivot here. Right, so take note, these are the key levels for the cable on the daily time frame, right? It has stabilized above 1.2914 since last Wednesday and Thursday, and a clean break above this descending trend line is bound to attract more bids for this currency pair, and then we can target the first resistance as the first potential take profit target level, and also we can identify the 38.2% Fibonacci retracement as the subsequent take profit target as well. All right, now let's take a look at the Aussie. All right, hi Costas. All right, yeah, definitely we'll cover gold, dollar franc, and the euro as well. All right, okay, great to see the request coming in. We'll take a look at the Aussie now, and then we'll take a look at dollar yen. Now, looking at the Aussie as well, similar story to the cable, right? They all have been seem to have stabilized just above their respective pivots and are retracing higher, right? So you can see here the pivot for the Aussie is at 65.72. This is a pretty decent overlap resistance level, and you can see here the Aussie stabilizing here on 9th of October, 10th of June, and over here as well, right? This part here is pretty choppy, right? But it's still a pretty decent level, and we can see that price action today as well, sort of respecting this support level here at 65.72. Right, and of course beyond the pivot, the next major support levels for the Aussie is around 65 cents, right? We see the Aussie making a pretty decent swing low support here at the beginning of August. Of course, we can see this wick is pretty low, right? This wick dropping as low as 63.48, right? But generally we can see that the Aussie has stabilized around this level at 65 cents on 2nd of August. So this is where I would identify the first major support beyond the pivot here, right? In terms of resistance, right? We can also see that there's a nice descending trend line that's been in place since 21st of October. So similar to the cable as well, a clean break above this descending trend line. And then we can expect, we can identify the first take profit target close to the first resistance, which is at 66.46. And beyond that, I see another pretty decent resistance level, almost like an overlap level at 67.18. So you can use this resistance levels as potential take profit targets should we see the US dollar come under selling pressures. Remember, jobs data is lined up on Tuesday, Wednesday, and Friday. And if we do see softer data, it could create a lot of headwinds for the dollar, and potentially that would lift the other currency pairs such as the Aussie as well. Now we can also run a nice Fibonacci retracement from this uptrend here on 30th of September going down to this low of today at 28th. We can see that a 23.6% retracement sits pretty close to the first resistance, and the 38.2 retracement sits exactly with the second resistance here. Right, on this uptrend, we can also run a Fibonacci retracement. For this, we are trying to identify potential extension levels, right? Key extension levels set at 127 and 161%. As of now, you can see these extension levels are in no man's land, right? So that's fine. Let's not force a Fibonacci retracement or extension into the analysis if it's not necessary. Let's see if there's anything else we can do. No, probably not. These are the key levels here. So take note, although the Aussie and the cable are still trading in a significant downtrend, right? It's still in a bearish downtrend. There may be an opportunity for a bullish a breakout for the Aussie as well as for the cable here, right? Especially if jobs data is weak, we can expect the respective currency pairs to break out of their uh, descending trend lines and drive higher. All right, okay, let's cover dollar yen, and then we'll go on to dollar franc and then gold as well, right? Okay, dollar yen gapped significantly higher this week, right? Or this earlier this morning, right? It opened at 153.23 after closing at around it gapped about 100 pips higher this morning. This was primarily due to uh, the general elections that took place in Japan on Sunday, where the ruling coalition lost its majority in government, in parliament, right? So that saw significant weakness for the Japanese yen, which is then naturally, going to cause dollar yen to climb higher. For now, it looks like after spiking as high as 153.87, it looks to be pulling back very sharply and is trying to close the gap as well. So take note, right? Should we see dollar yen close the gap at around 152 and stabilize around 151.60 70 as well, right? This may identify a potential pretty decent entry to go long on dollar yen. But dollar yen has been very weak and looks to be something to keep an eye on as well, and especially with the Bank of Japan coming up on Thursday, right? And if they don't raise they are widely expected not to raise their key policy rate, right? So that could add further pressure on the yen, and that means dollar yen is likely to rise higher. So we can also see on a daily time frame we have a nice ascending trend line that's been in place since the 30th of September. So this is a pretty key support zone here that I've identified with this dotted green lines, right? It does look like dollar yen is looking to close the gap. Remember, it gapped higher at 153.23, about 100 pips higher than last Friday's close. It really does look like it's trying to close this gap here. And if it can stabilize above the ascending trend line, right, it gives us a good opportunity to go long on this currency pair once more, right? Gives us a good opportunity to go long, especially with the Bank of Japan coming up on Thursday. I think yen weakness could persist throughout this week. But one key would be one critical point to take note of is this ascending trend line. A clean break through this ascending trend line, right? And then we can expect this currency pair to drop lower. Right, but as long as it continues to respect this ascending trend line and bounce higher, right, that gives us further confidence that this bullish uptrend that's been in place since mid-September is likely to extend even further. Right, okay, so pivot has been identified as a pullback support level. The pivot is actually a pullback support level at 152.92. Previously, this level functioned as a nice swing low support on 6th of May. Pretty decent support here for a few days at the end of July, right? And then resistance here last Wednesday and Thursday. So this creates a nice overlap level that has been identified as the pivot, right? This is the overlap support. The pivot basically is an overlap support. And the next support beyond the pivot is another overlap level at 150.77, right? We can see resistance here in at the end of February, support here at the end of March. This creates a nice overlap level which has been used in the identification of the first support. So that's at 150.77. In terms of resistances, right, we can probably see something. Okay, there's a pretty decent overlap level here, close to the 78.6% retracement. That's at 157.41. However, I do see perhaps there's another pullback level here as well. Maybe this is more of a second resistance And the first resistance is this level here, right? This is a pullback resistance level. Previously 154.87, function as pretty decent support on 16th of May, and then again on 4th of June we see a nice swing low taking place here, swing low bounce taking place here. So this was previously a support level which then turned into resistance, and this is quite likely where we can expect dollar yen to run into some headwinds once more, right? So should it reach this level at 154.87, right? Oops. Should it reach this level once more, we can probably expect the dollar yen to run out of steam at around this level here, right? Pretty decent overlap resistance level, and beyond that, we have another nice overlap resistance level at 157.41, which is accompanied by a Fibonacci retracement at 78.6%. This retracement was found starting from this swing high on the 3rd of July, going down to the swing low on the 16th of September. Right, and the first support is also accompanied by Fibonacci retracement at 23.6%. This retracement was found by running, starting from here, this swing low, 16th of September, going up to the high of today. Right, so these are the key levels for dollar yen, right? And if the Bank of Japan keeps rates on hold on Thursday, and we see a fairly balanced or even maybe dovish uh, rhetoric by Governor Ueda during his press conference, we can expect the yen to weaken even further. So that means the dollar yen is likely to climb even higher. But take note, right? This ascending trend line is going to be critical into the strength of this bullish rise here. It will be critical to the strength of this current bullish uptrend. All right, let's see. Then there was dollar franc. All right, let's move on to dollar franc. Right, of course, with dollar index pulling back sharply, right, demand for the dollar is pulling back or easing as we speak. So naturally, dollar franc, after rising strongly, right, it made a high today at 86.99, almost breaching the 87.87 level, right, and is falling back towards what I see is a nice, almost like a nice overlap level here, right, at 86.41. We can see dollar franc previously run into resistance on Monday and Tuesday, 14th and 15th of October, after which it has proceeded, this level has proceeded to function as nice support from 17th of October till last Friday. So this creates a nice overlap level here, and probably now with dollar franc pulling back, we can probably run a Fibonacci retracement from this low on the 30th of September going up to the high of the day. Perhaps there's some Fibonacci retracements that we could use, right? We can see 23.6% sits just underneath the first support, so that's pretty, we can use that as well. And as a little pullback here taking place on 10th of October till 14th of October, right? This sits quite close to where the 50% retracement sits as well. And when you look at it, it's actually like a nice overlap level, right? When you stretch it all the way back to 2nd of September, this is actually a nice overlap level, overlap support level at 85.37, which is accompanied by 50% Fibonacci retracement. So we're going to keep 23 and 50%. And just highlight this as a zone here, right? So these are the key levels for the dollar franc, right? So should dollar franc pull back towards this first support at 86.41 and stabilize around this level once more? Remember, this is a level where dollar franc has found support, strong support since mid-September. This can help us identify a potential buy entry, right? So we can have a potential long opportunity for dollar franc at around the first support, which is at 86.40, 86.50. If it manages to stabilize around this level once more, it helps us identify a potential buy entry, a long trading opportunity, and we can target as the first, we can target today's high as the first potential take profit target. And of course, if dollar franc continues to rise higher, right, there's a nice swing high resistance here. I'm going to adjust the levels now. This is pivot. This is first resistance now, and this is second resistance. Right, with dollar franc currently pulling back, this overlap level now is at 86.41 is our pivot for today. First support is this overlap level at 85.37. right? So we have a potential bullish bounce opportunity for dollar franc should it stabilize at around a pivot of 86.41, which is accompanied by Fibonacci retracement at 23.6%. So should that bullish bounce materialize, we can target today's high at 87.87 as the first potential take profit target. And then of course, if it continues to rise higher, we can then target this swing high resistance where the first resistance sits at 87.25 as the next potential take profit target, right? So these are the key levels here for dollar franc. We can see that after uh, the franc the franc has appreciated sharply from 1st of May till 26th of September, right? It appreciated sharply, causing dollar franc to pull back. But since then, we can see demand for the dollar has picked up, while of course franc has weakened as well, right? So causing dollar franc, of course, to rise up quite sharply since the end of September, right? So these are the key levels here for dollar franc. Now let's move on over to the commodities. We'll start with gold. XAU USD is an instrument that tracks spot gold futures. Then we'll take a look at WTI oil as well. Right, so we can see here gold prices have been in a strong bullish uptrend for many months now. If you look at it on a monthly time frame, right, we can see we're coming to the close end of October, and we can already see since July of this year, it's already 1, 2, 3. It looks all set to notch its fourth consecutive month of gains. You can see very strong bullish uptrend for gold since 2nd of October 2023, right? It's pretty much gone up in a straight line, right? Breaking through multiple resistance areas and forming a new all-time high pretty much every week, right? So most recently, right, we can see that the most latest intraday all-time high for spot gold has been formed at $2,758.45 per ounce, and that occurred last Wednesday, 23rd of October. Now, with gold prices pulling back, I see it pulling back towards the support level, which has been identified as the pivot at $2,714.25. And it's a pretty decent pullback support level here. And should we see gold prices stabilize once more, it also helps us identify a potential long entry where we have a nice opportunity to go long on gold again. And then we can target the intraday high, the area between the intraday high and the 78.6% projection as a potential take profit target. Now, this 78.6% projection level was found by starting from here, 0.1 on 4th of September, going up to 0.2, which is on the 26th of September, and ending at 0.3, which is here on 10th of October. So this is how we found the 78.6% projection level. And of course, should gold prices continue to climb even further, we can then use the 100% projection to identify the next potential resistance barrier. And that's roughly at $2,817. Right, we can see here there's also a very nice ascending trend line on the daily time frame that's been in place since 5th of August. And of course, we see this commodity trading or this precious metal trading above the green Ichimoku cloud, which highlights the current ongoing bullish momentum. Right, so very strong bullish uptrend. If gold prices can stabilize around the pivot once more, it helps us identify a nice long opportunity. And should that bullish reversal take place, we can target the zone between the intraday all-time high and the 78.6% Fibonacci projection as a potential take profit target. Now, in terms of support, right, this level at 2,672 is a pullback support level. Right, previously this level functioned as a nice swing high resistance at the end of September, and after making a clean break above this level on 17th of October, 2,672 can now potentially function as a pretty decent pullback support level, which is also accompanied by a 50% Fibonacci retracement. This retracement was found from here, this low on 10th of October, going up to the intraday all-time high on the Wednesday, 23rd of October. We can see that 50% retracement sits pretty close to the pullback support here. Right, so these are the key levels for spot gold prices. Right, we have a potential bullish opportunity, a bullish bounce for spot gold today. Right, so should we see gold spot prices stabilize around the pivot, this is where we can identify a suitable long entry. Now, of course, this ascending trend line is going to be critical as well. It's been in place since 5th of August, and any break below this ascending trend line is going to highlight is going to mark a major shift in momentum. So take note, this ascending trend line is critical to the bullish uptrend, and if it does not hold, right, then gold prices are likely going to fall towards the first support at the very least, or perhaps even lower as well, down to this swing low, right? It's a nice swing low support here that has taken place on Wednesday, 9th of October, and that's at $2,607. So take note, this ascending trend line is critical to this to the bullish uptrend, and any break below this level here, or clean break below this level here, is likely going to invite more sellers, and we can probably uh, be a bit more wary, especially if this intersection here where the cloud is and the first support does not hold. All right, so these are the key levels for spot gold prices. Let's now move on over to the other commodity, which is crude oil. Right, XTI USD is the instrument that tracks WTI crude oil futures, and we can see crude prices actually breaking through the pivot level today. The pivot level is at $68.24 per barrel. It's a nice swing low support that has taken place at the end of September. We can see crude prices gap significantly lower as well, right? Crude prices after closing at about $72.20 per barrel, it dropped down to open at $69, and now has gone down beyond 6% as well. It's lost over 6%, almost 6.5% since Friday's close. A huge drop in prices, right? We can see very clearly crude prices are facing extreme volatility. We are seeing massive swings to the upside, massive swings to the downside, right? So take note, and especially over the weekend, we have seen large gaps as well, and this is one of the largest gaps as well I've seen, I think in quite a while, right? And although whether this gap can be closed, right, at least doesn't look like it's going to happen today or tomorrow, but perhaps let's see where prices can stabilize. So what we're looking at now, right, is actually crude prices making a bearish breakout. Is actually making a bearish breakout through a swing low support, right? So with this bearish breakout currently in progress, right, we can then target, if you've already gone short on on oil, right? For those of you who may have gone short on oil earlier this morning, right, identifying your take profit target at this swing low support is a suitable area to do so, right? This is a strong swing low support that has taken place on 10th of September, and this price range at around $66 to about $66.80 is a suitable target to identify for any short traders on crude oil over here, right? So take note of that. In terms of resistance, there is probably a pretty decent, this level now at $73.14 is a pretty decent overlap level, but of course with this gap taking place today and crude prices dropping lower, the first resistance is likely now to be this level here at $69.53. We can see crude prices making a pretty decent swing low support here on Friday 18th of October and Monday the 21st, and you can see here as it gapped lower, it tried to retrace a little bit higher but stalled around just underneath $69.50 and continue to fall like a rock. Right, so we have a bearish breakout currently in progress for crude oil, and for XTI USD, you can target this zone here, this swing low support zone at around $66 as a potential take profit target for your short trades on crude oil. Right, okay, I missed euro as well. All right, hi Costas, yeah, I missed that euro, so let's head on back to the currency pairs, look at euro, and then we'll come back to the indices. Right, so of course, similar to cable, similar to the Aussie, right, the euro has stabilized above its pivot as well. The pivot is actually, I wouldn't use this level here. The pivot is actually here, right, at exactly the 78.6% Fibonacci retracement. Right, you can see here this retracement started from here, this swing low on the 26th of June, going up to this high here on the 25th of September. You can see there's a nice swing low support here that took place on 1st of August, and it is where, once again, the euro has stabilized last Wednesday and Thursday, and looks to be consolidating around this level here and bouncing higher today as well. Now, if you've gone long on the euro early this morning, right, you can target a potential take profit area at around the 23.6% Fibonacci retracement, which is at the first resistance at 1.0867, right? So pretty decent resistance level here. So this bounce in the euro, right, could stall or run out of steam at around 1.0867. So this is where you should identify your potential take profit target at around this zone here. Right, of course, first support is this strong swing low that has taken place here. It's almost like a double bottom, right? This is almost like a double bottom here taking place in June, or it's almost like a triple bottom here, right? Basically one big swing low at 1.0664. So this is how we've identified the first major support beyond the pivot. Right, so take notice at the key levels here for the euro. Then we'll go on over to the indices. All right, hi Double. Yes, we can cover Bitcoin and Ethereum as well. All right, great to see requests for crypto come in as well. All right, so let's quickly move on over to indices first, and then we'll wrap things up with crypto. Right, so looking at DE40, right, this is the instrument that tracks the DAX futures, and we can see initially the DAX was rising strongly this morning. Right, it was rising strongly this morning. It actually gapped higher, right? It gapped higher at slightly higher. Let's see, it closed at 19,415 on Friday, and it gapped higher at about 19,493 to go as high as 19,582. But since then, it's pulling back, right? Maybe it's trying to close the gap here, but take note, this first support now is going to be my pivot. This pivot is the first resistance, and the first support is a little bit lower. Like we'll try and identify it soon. So you can see here, the DAX is now also testing this pretty decent ascending trend line, right? This ascending trend line has been in place since 10th of September. See a nice bounce taking place here on 8th of October. And then again, last Wednesday as well, last Wednesday and Thursday. It looks to be testing this area once more, right? So this is the key support level that's bounded by the ascending trend line and the pivot at 19,354, which is also accompanied by Fibonacci retracement at 23.6%. So this retracement at 23.6% was found from this swing low 10th of September going up to the intraday all-time high on 17th of October. There's another second retracement starting from this swing low here on 8th of October. Once again, ending with the intraday all-time high on 17th of October. We have the 50% retracement. So we have a Fibonacci confluence here. That means we have more than one Fibonacci level at a particular price zone, which adds further significance to the strength of this support area. So take note, an ascending trend line, a little pullback level, and two Fibonacci retracement levels identifying a potential strong support area. So if the DAX, right, manages to stabilize around the pivot once more, it helps us to identify a long opportunity. And should that bullish reversal take place, we can then target the first resistance at 19,670, which is a swing high resistance close to the all-time high, as a potential take profit target. Now, in terms of support beyond the pivot, right, I don't really see anything else except for this swing low here, right? There's a pretty decent swing low taking place here on Friday, 4th of October, which is at 18,977. Right, is there a Fibonacci retracement that aligns well? Actually, if I stretch it across, this looks like a pretty decent overlap level here. Right, you can see a nice swing high resistance here at the end of August, resistance here as well on 19th September till 25th, before functioning as support from 3rd of October. So this level at 18,971 is actually a pretty decent overlap support level. Now let's look at all the fibs, and we can see that we also have the 50% retracement aligned pretty well with the first support. So let's keep 23 and 50. Right, so take note here, although we saw a nice gap up in the DAX and it was rising strongly earlier today, it has reversed and dropped lower, and it's approaching what I see is a critical support area identified by the ascending trend line, the pivot, which is the pullback level, and two Fibonacci retracements as well. So if the DAX can stabilize around the pivot, right, it helps us identify a long opportunity, and a bullish bounce could materialize, and then we can target close to the first resistance as a potential take profit target. All right, okay, so this is the 40. Let's go US 500. So okay, so US 500 seems to be so the US indices look to be in the green. Europe, or well, this is only for DAX, looks to be in the red. So with US 500 gapping higher, is rising up towards its intraday all-time high. The intraday all-time high for US 500 was formed on Thursday, 17th of October, at around 5,882. So if you've gone long on US 500 today, right, You can then once again target your take profit target close to the pivot, right? This is where US 500 stalled last Friday as well, right? It rose very strongly last Friday before running the resistance close to the intraday all-time high and pulling back. So today is making another attempt, a second attempt towards this level once more. And this intraday all-time high is also accompanied by a Fibonacci projection at 61.8%, and the next resistance barrier is identified by the 78.6% Fibonacci projection. Now, these projection levels were found starting from here, 0.1, 2nd of October, going up to 0.2, which is the intraday high on the 17th, and ending at 0.3, which is on the 23rd. Right, in terms of support, 5,761 is an overlap support level. We can see that it functioned previously as resistance here at the end of September, early October, then made a nice swing low bounce here on the 23rd. So this creates a nice overlap level. And this overlap level is also accompanied by two Fibonacci retracements. We have the 23.6% and 50% retracement levels here. Right, so this 50% retracement was found starting from here, this low on the 2nd of October, going up to the intraday all-time high on the 17th. And the 23.6% retracement was found by starting from this swing low on the 6th of September and ending, of course, once again on the 17th of October. Right, so should we see, so as of actually, if you look at it, US 500 has practically just ranged sideways between 5,880 on the upper bound and about 5,775 on the lower bound. Right? So this has been in place since mid-October. Right? It's just sort of consolidating now. Right? We are not seeing a very strong bullish uptrend. This current consolidation phase looks pretty similar to this here that has taken place at the end of September and early October. Right? So it looks to be consolidating once more, similar to what we saw at the end of September and early October. Right, so take note, and also it's earnings week for big tech. Right, we've got Apple, Microsoft, Amazon, Alphabet all reporting this week. Right, and if their numbers are going to surpass market expectations, right, then we can definitely expect uh, big tech to lift the overall indices, to lift the overall US indices, especially for the S&P 500 and the Nasdaq Composite as well. So take note, big tech is on the earnings calendar this week, and a strong set of results is quite likely going to drive US equity markets higher as we progress through this week. All right, okay, so take note, these are the key levels for US 500. All right, okay, Double had a request for dollar CAD as well. All right, so let's do dollar CAD, and then we'll move on over to crypto. Right, let's quickly look at dollar CAD. Right, we can see dollar CAD in a very strong bullish uptrend. So the Ludi, which is the Canadian dollar, right, has depreciated significantly. We can see that dollar CAD has gone from as low as 1.3419 at the end of September to as high as 3906 today. Right, it's gained well over 3.6%. Racking up almost 490 pips over this process, over this period here. Right, very strong bullish uptrend for dollar CAD. Right, there's significant weakness in the Canadian dollar, right, especially with the Bank of Canada cutting rates last week and their economy looking pretty muted. Right, it all has resulted in a very weak Canadian dollar. So that is why dollar CAD has accelerated strongly over the last few weeks. Now, this swing high resistance that was formed on Monday, 5th of August, serves as the pivot here. So what we've seen yesterday or last Friday was a bullish break. Right, this level at 1.3879 previously was a swing high resistance level, which got taken out last Friday, and for now it seems to be holding up above this level here. Right, so we have a potential bullish continuation for dollar CAD, and should this bullish continuation extend even further, we can target the pivot level at 1.3946 as a potential take profit target. Right, close to the pivot level would be a suitable area to do so, and beyond that, right, we have a nice multi-swing high resistance, or no, not multi-swing high resistance, but a swing high resistance. Probably you can use this level first. Oops, where did it go? Where did it go? All right, doesn't matter. Okay, wait. Is this the one? I believe so. 39. Yep, I think this should be the one. Right, okay. And so this is the next resistance level beyond the pivot here, which is at 1.3977. It's another swing high resistance. And yeah, so we can see Loonie has weakened significantly, causing dollar CAD to rebound very sharply, breaking above many key resistance levels. And as most recently, this swing high resistance here that has occurred on 2nd of August. Right, so this level now at 1.3879 can serve as a pretty decent pullback support level. And should it manage to stay above 1.3879, right, then we can target the pivot as a potential take profit target for dollar CAD. All right, before we move on to crypto, right, I'm just going to launch a poll as well. Truly appreciate it if you guys can give your feedback with regards to today's webinar, and then we'll continue the analysis on Bitcoin and Ethereum. All right, okay, now we can move on to Bitcoin first, and then we'll wrap things up with Ethereum. All right, looking at Bitcoin, right, it has risen, it has consolidated around 66,500 last Thursday and Friday, stabilizing around this level, and has rebounded quite strongly over the weekend, right? Over Saturday, Sunday, we can see it rebound quite strongly, and today as well, it's been rising up right quite sharply as well, right? So can see here last Sunday as well, or yeah, last Sunday and Monday, we saw Bitcoin running into resistance at around 69,500, right? So this is once again, this is the first immediate resistance barrier, which has been identified as the pivot, right? So with Bitcoin rising sharply today, you can identify this resistance zone as a potential take profit target, right? Take note, we have a potential take profit target here around the pivot at which is at around 69,525. And of course, if we do see, actually, I can even stretch this all the way out, right? It's almost like a multi-swing high resistance, right? This is like a multi-swing high resistance here. And of course, if Bitcoin continues to climb higher, we're going to be targeting the first resistance, which is at 71,470. This is a multi-swing double top here, right? You can see a nice double top taking place here. The first swing high taking place on 21st of August, May. Second swing high taking place on 6th of June. Nice double top here. So this is the next major resistance level for Bitcoin beyond the pivot, right? And the first support at 65,857 is a nice overlap support level here. That's accompanied by a Fibonacci retracement at 23.6%. And there's also a Fibonacci retracement at 38.2% over here. Right. All right. Thanks everyone for the votes as well. Truly appreciate it. All right. USD. Okay. Yeah, I'll try and do dollars, US dollars, Singapore dollar as well. Okay. So Bitcoin is here. Let's do Ethereum. I think, yeah, we should have time for USD, Singapore dollar. We can do that as well. All right. So we can see Ethereum actually has been sort of ranging sideways. If you look at it, right, it's actually just been ranging sideways approximately since 7th of August, right? Ranging between $2,220 on the lower bound and around $2,800 on the upper bound as well. So yeah, it's a pretty wide range, but you can see it's just been trading sideways, right? And we don't see a strong bullish uptrend as what we saw at the end of January, early February, and we're not seeing a strong bearish downtrend either, right? As what we saw from June all the way till August, right? It's sort of been consolidating within this box here, within this range, and it looks to be rising higher once more, right? So it came very close to the pivot level. The pivot level is a nice support here, right? Like a nice like pullback level here at $2,347. It came very close to this level on Friday and has since reversed to climb higher. So if Ethereum continues to climb higher, right, we can target the $2,768 as a potential take profit zone. This is like a multi-swing high resistance, the first of which took place on 24th of August, and of course the most recent one taking place on 21st of October. This multi-swing high resistance is also accompanied by Fibonacci retracement of 50%. Right, so this started from here. We started this retracement from here, this swing high on 22nd of July, going down to this swing low here on the 5th of August. Right, so these are the key levels for Ethereum, and the first support is at 2,223, which is also a nice swing low support. Right, a nice swing low support taking place here on Saturday, Friday, and Saturday, 6th and 7th of September. All right, so these are the key levels for Ethereum. Right, let's move on. Let's do dollar, Singapore dollar, US dollar, Singapore dollar. Right, so we can see dollar, USD Sing rising quite sharply as well. Right after making a nice swing low here on 27th of September, we've seen demand for the dollar pick up, and we are seeing it come close to a nice resistance level here. Right, what I see here at 1.3295 is almost like an overlap resistance. We see a nice swing low taking place initially. We see a nice swing low support taking place initially on 11th of March. After that, after it broke through this level, it retraced a little bit higher, but ran into resistance on 7th of August. And this creates a pretty decent overlap level here at 1.3295, which we are using in the identification of the first resistance. Right, we can also run a Fibonacci retracement here. This nice retracement, and we can run from here. This swing high on 28th of June going down to the swing low here. Perhaps in the 61 and 78.6% that we can use, right? We can see a 61% retracement aligns very well with the first resistance. Actually, first resistance is probably going to be identified as the pivot, right? Because we're expecting dollar Sing to rise up towards the pivot here. So your potential take profit target for long dollar Sing can be identified at around the 61.8% Fibonacci retracement. And the first major resistance is another overlap level as well, probably around here, right? Not the cleanest overlap level here, but we can see that this level has functioned as support from 9th of April till 13th of June, after which it proceeded to function as a little bit of resistance at the end of July. And it's also accompanied by Fibonacci retracement at 78.6% just underneath it. Right, then in terms of support, this is going to be a little bit challenging. I would say probably, okay, not the cleanest level. Probably there's a probably this level here, 1.3165, right? As the dollar Sing was dropping sharply in mid-August, it's managed to stabilize here on 14 and 15, stage a little rebound before dropping lower again. And we can see here on Monday and Tuesday, 21st and 22nd of October, this is where it briefly ran into resistance before breaking out. So this is where I think it's a nice, pretty decent overlap support level at 1.3165. We can also now run a Fibonacci retracement from this swing low on 27th of September, going up to this high on the 28th of October. I believe is the 23.6% that we can use, and we can see that 38% also lines up well, forming a nice overlap support level. Let's use 23 and 38. Right, so these are the key levels here for dollar Sing, and we can probably target the 61.8% Fibonacci retracement as a potential take profit target for this currency pair. All right, okay, so we've come towards the end of today's webinar. Right, thanks everyone for tuning in. I truly appreciate the comments and the feedback as well. Do take note, it's US jobs data week, as well as Bank of Japan's monetary policy statement, and also its big tech earnings by Apple, Microsoft, Amazon, Alphabet as well. So it's going to be a pretty eventful week for both currency markets and US equities as well. All right, thanks everyone for tuning in. Do look out for all upcoming webinars by IC Markets for the rest of this week, right? And I wish you all the best in your trading journey, right? Thanks everyone. Once again, take care and have a great trading week.